This class is going to be a general purpose class, going over just a little bit of everything, trying to combine all of our different tools and trading systems into one class. And I'm going to show a lot of different currencies and highlight some of the best trades and trades that I would have taken. So here's the euro dollar. You can see coming up to today, the price broke from underneath above the hourly, so that's a bullish sign. We have a Fibonacci retracement level here that I do each night. The gray levels are Fib retracement levels, and the dark gray are Fibonacci profit target levels that I do each night. And any Fib level that's underneath the lower containment band tends to be very, very strong support if on the bottom, and if on the top it tends to be resistance. In other words, there's likely to be major buying here, and you can see it's exactly what happened. But starting the day out, you have major resistance right above you. You have the Fibonacci area, you have the previous swing. It looks like there's a monthly R1 level here, and there's also the half number. Whole and half numbers tend to also be resistance and support levels. So coming to it from underneath tends to be resistance area. So starting at midnight, if there wasn't all this resistance here, you clearly would want to buy this breakout right here because it went sideways for an hour and a half and broke out. But there's really quite a bit of resistance above you. So if you do take that trade, you can see you got stopped out with a small loss. If you went back in here, you might have made 6 pips. This isn't really enough of a pullback. Or if you bought the breakout of the high here, which is entirely reasonable thing to do, typically we want to put our stop underneath the swing low here. But a lot of times breakouts are false. So what I do is on breakouts like this, I tend to have a stop a little bit closer, and most of the time, honestly, I'm using a range chart. It is raining quite heavily outside, so if you hear any rain and thunder, that's what it is. Here's a 6 pips per bar range chart. So if you look on a range chart like this, you can buy the breakout right here and have a very, very tight stop, either right underneath the swing low or even just underneath this previous bar. When it goes up, typically breakouts are going to work, so you can tighten your stop, and a lot of times I want to lose 5-6 pips max here. And you can see if you flip that, false breakouts, when they fail, oftentimes lead to big moves the other direction. This one proceeded to fall 10, 20, 30, 40, 50, 60, 70, 80 pips, and our very, very tight trailing stop kept you in the whole way. So if you lose 6, 7, 8 pips, you flip and make, even 20 pips, you've made money. In this case, it's fallen almost 90 pips. It's tremendous. Sometimes on the way back, they find support here at the hourly, and if it goes sideways for a couple bars at the hourly and starts to go up, you want to get in. Sometimes it goes sideways here at the hourly. When it breaks down underneath there, it's a very high probability short. And in this case, it just penetrated everything and fell a tremendous amount of pips. You don't want to be, there really was no entry into this trend unless you got into the false breakout at the high. Again, if it would have found the 20-day moving average right here in the hourly and went sideways there and then broke down, that's a good entry. Here's the previous day's low. When it goes sideways there and breaks down, that's usually a good entry. But by that point, it already moved too much. Again, once you see a currency that's moved too much, and then it has a nice little double bottom right here, it's usually a pretty high probability place to buy, especially if, like you saw today, it was at our Fib level. So once it kind of came down to this level, I always give it a few hours to try to go lower. When it can't, when it breaks out right here, you might have went long. And I don't use the trailing stops when doing counter trend trades. I put my stop here. Anytime it kind of goes up and down, it's going sideways, I'm yanking my stop up underneath the lows. And I'm not being greedy most of the time because this is a very strong trend to the downside. The maximum profit I'm going to get is the Fib targets. So you can see that's exactly where it went to. So we might have been in this trade, again, giving it some time to try to go lower. It wasn't able to do so. And when it breaks out right here, you'd be in at 59 and out somewhere up here at 93. So you made about 30 pips on a counter trend trade there. Here's the pound dollar. And again, this one is sitting right on the hourly moving average, which when that happens and it breaks out to the upside, you usually want to go long. So your stop is underneath here. It appears previous week's highs right there, a good place to put your stop under. And it goes up, and there's quite a bit of strength at first, and then you get stopped out. This one actually does give you an entry into the short because it breaks down underneath the hourly. It's kind of going sideways right here, and that's usually a pretty safe place to get into a continuation. It's kind of like a flag pattern. Oops. And looking at this on the range chart, you can see a very beautiful flag pattern on here. And again, you're short, and you might just be out right here when the trailing stop gets hit at 24. You made 20 pips. And it did the same exact thing at the previous day's low. So if you take this short right here, most of the time when it's underneath the lower band, it's not going to go beyond the 1.618 fib target of this. So this level right here at 1.5787 is my maximum profit. Now, in this case, it went a little bit below there. I probably would have just got out of the whole trade right around that area. It did go a little bit further. You know, the intelligent trailing stops on the range charts do a phenomenal job of keeping you into big, strong trends. And you can see the real-time momentum was off the charts to the downside. Here's the euro-yen. This is what typically happens most days. The price is underneath the hourly, comes back up and hits it. And at that point, there's quite a bit of strength right there. It doesn't pull back immediately. You're kind of expecting it possibly to bust through there, but it doesn't break those highs. And you can see it had less momentum than before. And so you go short when it goes underneath these lows right here. Short at 13. And you have some support areas right underneath here. But once those get broken, the next area is the 10-day moving average at 109.32. If it stalls here, you might want to get out of half and use the trailing stop on the second half. But this one just keeps going and going. And when it gets underneath the lower band, we have a super, super tight stop because usually you get reversals down there. And it got you out at 109.06. You short this almost 106 pips higher. I mean, that's a tremendous profit. Underneath the lower band, typically it doesn't continue. So, you know, normally you wait for a pullback, you go short, but it's underneath here. If you want to take this trade right here, you know, if you have a very, very tight stop, and typically you just draw your trend lines over the bars high when that breaks, you know, you want to get in. Anytime a market is this far underneath the lower band, you get a little double bottom like that. It's usually good for 20, 30 pip counter trend trade. So here is the euro-yen on a range chart. Came down, went up, came down again. Notice there's quite a bit of weakness here, and then it came back up and went sideways with almost no weakness. If you're really kind of a more conservative or afraid trader, you might want to wait for a little pattern like this with no weakness and buy that. You're risking, you know, 10 or 12 pips, and you can see in this case it went up and got you out of here at 45. You're in here at around 11. It's a beautiful 30 pip win, and again, most of the time on counter trend trades, the fib targets of that first wave up are where you want to get out with a profit. As you can see, perfect. This also, by the way, is our Elliott two-wave fib system, which is a continuation trade. You wait for a strong trend and then a one-wave, you know, counter trend move, and when it hits somewhere between the first and second fib target, and usually they do go sideways like this, when it breaks down again, you go short. And sometimes they come back down to the lows and find support there, but it's, you know, a tremendous number of pips away. And other times it goes through the low and it keeps falling. This one, you know, you want to use our intelligent trailing stop. You would have been short there at 41 and out somewhere around 13. But nonetheless, that's 30 pips. 10 pips a day doubles your account every 2 months. So this is 3 days worth of minimum profits right there for you. Let me see what other currencies we have today. Here's the pound yen. Now this one also is underneath the hourly. And when it came up to the hourly right here, you can see it had a little bit of strength. It's going sideways. This is the previous day's high right here, or sorry, previous day's low in dotted red, 132.17. When it breaks down underneath this low at 06, you go short. And again, the trailing stop got you out right here. This one, unfortunately, didn't keep you in as long as the other one. Again, we tighten the stop very closely when it goes underneath there. On a range chart, it might have had a little wider stop. Let's take a look. That was around 5 a.m. So this one really was making a lot of up and down moves. The range chart had a really tight stops. It's perfectly okay if you want to take every one of these trades when you find these kind of momentum. Sometimes you only have 10, 15 pip moves. This one right here, 28 out at 99, nice 28 pip move. And the 3.0 containment band, which I like to color green on the chart, usually is the end of the move. In the pound yen like this, it's one of the weakest currencies. I wouldn't be buying it the first time down. But again, when you get a double bottom like this, and it's at or below the green 3.0 containment band, pretty decent place to get in this trade at 72. Remember, draw your fibs on the first wave up. And again, what a great place to get out of that trade up there. In at 70, out somewhere maybe at 35. So that's a 65 pip move. Again, a whole entire week's worth of minimum net profit. And when you're in a trade like this, you really want to just kind of watch what's happening in our, this is a build your own trend tool. You can use the FX Trend Pro. If you're in this and you see not much weakness, or strength, you just kind of put your stop underneath that low. And when it's going up with a lot of strength like this, if you want to get out of half right here because it started to dip in strength, that's perfectly up to you. Once you're up 20, 30, 40 pips in a trade, there's no really bad way of handling the trade. Usually I get out of first half of my trade at any kind of resistance. So when it hit this area right here and went sideways, I would have been out of half. And usually I always let my trailing stop get out of the second half unless it goes above the 1.618. If that's the case, if it goes above the 1.618, I'll usually put my stop underneath the previous bar's low. The plus and minus key allows you to zoom in. And most of the time, like I said, if it hits this area here, put your stop underneath that bar, you'd be out of this at 41 versus 32. So that's another 9 pips of profit, and those add up. Don't be stingy with profits like that. I'm just going to end today's class by showing some of the other currencies and just looking at the trading zones. These are the Fib areas that I do each night. You can see my Fibonacci retracement level was the high of the day in this currency. Australian dollar, the first Fib area acted as support most of the day, and then it came down and hit the second Fib area. Kind of didn't get much of a bounce off that. Then it hit the Fibonacci retracement level, and it did get a little bit of a bounce after that. This one came down and hit my Fibonacci profit target level, and it really wasn't much of a bounce. But these Fib areas, when they're underneath the 2.0 containment band, are major areas of support. When they're above the upper 2.0 white band, they're major areas of resistance. You usually do not want to short, directly into it. If it's only 10, 15 pips down, you might want to pass on a trade. If it's 20 or 30 pips down, certainly take a trade because they do tend to act like magnets. Traders aren't really getting into positions until they see what happens at this key support area. So they kind of stay out of the way. As the currency's falling, they're not doing anything. They're waiting to see how this handles it. And this one also happens to be right near the previous week's low. Anytime you have two major support areas near each other or resistance areas, they're called support clusters.